In KKR's outlook for 2026, the company saying that the global economic backdrop argues for high grading, which is essentially upgrading portfolios, and that the cost to do so is extremely low. For more on this and on the markets, I want to bring in Henry McVey. He's the Chief Investment Officer of Balance Sheet at KKR. Good morning to you. What does that even mean, sir?
Look, we've had a huge run in the markets over the past 3 years. If you think about it, I think Joe was talking about this yesterday. You've had multiple expansion every year at 13%. You've had credit spreads come in. Kind of money came crashing into the system. It doesn't cost you right now. Let's use credit as an example. The spread difference between triple Bs and triple As is as low as we've seen it. So in a world where things have, appreciated in price, you should be moving up in quality. I mean, we run a $200+ billion credit portfolio. We own an insurance company. We're all around the world. It's very easy for investors to upgrade and do that. And there's a lot of liquidity to do it. That's on the credit side. On the equity side, as I mentioned, we've had a lot of multiple expansion. Everything has happened in really 7 stocks and kind of 3 sectors. And what we think is going to happen, and we talked about this last time I was here, you're getting a broadening out. Like, we're super active in Japan. That market continues to perform. There are other areas in Europe. Everybody has been overweight the U.S. There are sectors outside of the 3 that have gone up that are going to do well, and the comps are really easy. I mean, what is President Trump talking about? He's talking about stimulus, and the stimulus is going to help some of the cyclical parts of the economy. So you just got to look at it a little bit differently than prior years.
In terms of, though, the stuff that basically everybody's owned, the Mag 7, do you still own that stuff?
I mean, we do mostly private stuff. What I would say is,
but for those folks who can't do it otherwise, I
think you got to start to diversify. Yeah,
because you think trouble is ahead?
I think ultimately the valuations in other sectors and the growth in other sectors are starting to pick up. I mean, international earnings broke out about 6 months ago. Nobody owns Europe. Nobody owns Asia. And we do a lot of that in the private side. And then we take these companies public. There's a supply-demand imbalance.
Let me ask you a question about the private credit market and also just private valuations.
Yeah.
There is a perception in the world that the marks inside the private credit and private even equity universe are not, let's just say, politely accurate relative to stuff that's getting mark to mark, if you will, on a daily basis in the public markets. Do you believe that?
I don't believe that. I mean, we're publicly traded. We get
well, no, you do, but the assets that you own do not. So that's the question.
All our valuations are done by third parties. So I would say that. I think there's a mismatch in perception versus reality, which is the reality is the credit cycle in 2021, if you didn't do kind of linear deployment and you got really excited about all the liquidity in 21, people put too much money to work in private credit. We learned that lesson in 2006 and 2007, and you created concentration risk. Point number 2 is that credit is going to normalize. It's unrealistic for credit to have losses, defaults in the 1% range, right? We have it nearly double. You can see that in the report. Credit needs to normalize. And so there's going to be a lot of noise around that. The third point would be around technology. I've been doing this 35 years. I've never seen anything that's happened since, I'm going to date myself, but Netscape and ChatGPT. What's happening, revenue per employee in the big companies is going straight up. Revenue per employee in the small companies is going down. And there is going to be a segment of that.
So why do you say that's happening?
I think that what happened after COVID was that you had automation, digitalization, the same way we did in the early 90s, and then the way that the internet bolstered productivity. Remember, we got huge productivity statistics yesterday.
Yep.
That is happening right now in this cycle, and it's happening through AI. And what's happening is the bigger companies have been investing, and they're getting scale. And it's happening in a world, I travel all around the world, where you can't just be a competitive company within the U.S. You have to be competitive globally. And so the scale players per industry, it's a winner take most.
It's a winner take. Companies ever catch up down the road?
I mean, we own a lot of small companies too. You've got to have a game plan around technology, automation, digitalization to be competitive. And that bifurcation is happening. This country has a huge competitive advantage relative to the rest of the world on technology. And that's why yesterday's statistics, productivity in this country was almost 5%. That's massive. If you look at some of the other parts of the world, it's either zero. Look at our neighbors up north. Productivity is about less than 1%. And so that is creating a have versus have-nots economy. What I think is going to happen in the markets, though, is all the values, a little bit where you were going, Andrew, all the value has been in the enablers of AI.
Right.
It's going to go the same way that Amazon, people didn't understand in 1997, that it was actually the people that apply technology, that are consumer-facing and business-facing, they start to accrue the value. And so I think what's going to happen is money is going to move out of just the enablers of AI to the people that actually apply AI across their business. And we're seeing that at KKR in our portfolio
and then
companies.
We got to go, but does that mean that the value comes out? Does air come out of those other companies that are effectively providing the...
Yes, law of large numbers. You're starting to see more CapEx spend, and so there will be a shift in the capital flows.
Okay.